Joining us with this week's Ag Week Market Extra, DTN market analyst Todd Hultman. And Todd, report out this week, the big one we were waiting for from USDA, the big shocker was the corn yield over 181 bushels per acre.
Yeah, there's a little bit of gasp in the building when we all saw that at the beginning, and to be honest, that was higher than we all expected. The market originally was looking for a slight decrease, and I was suspicious about that, but to see 181, I don't think anyone expected. A bit of a shock, very shock for the corn.
I think the disbelief came because there is a lot of variability in the crop in some areas.
Yes, to be honest, this is the second year in a row we've heard that variability term, and it's come, I think, largely from a lot of crop tours, and we have to keep in mind those are small sample sizes. So as we get into the September USDA numbers, there's still some margin of error there, about plus or minus 8%. Says USDA on their 90% confidence interval. When we get to October and November, though, it's going to be very hard to argue with those USDA numbers. And given today's number, I don't think we're probably going to dial back very much.
So given the fact that the ending stocks actually weren't raised a lot, only to 1.77 billion bushels, do you think the corn market has a lot more downside risk?
A lot more, no. I still think we're near the low end of corn prices this year. It may be a while before we see the seasonal lows given today's surprise. It may be a while for the market to digest this news. I understand that, but the demand outlook for corn is still very good this year thanks to Argentina's drought earlier this year, and just the fact that total world corn demand is doing much better. We have a better world economy than we've seen the past 5 years.
Soybean yield was raised as well to a record just under 53 bushels per acre, and that was a little bit more expected by the trade, wasn't it?
Yeah, Michelle, everywhere I've gone recently and have talked to people, they've all kind of bragged about how great their soybean situation is. So I don't think this was too much of a shock on the soybean side. And in fact, I think it came in roughly in the middle of a pre-report estimate. So yes, higher, but as we can also see by the soybean price today, I think, as you said, it was pretty well anticipated.
So because of that, do you think it's possible that we've put in a low end for the time being? Or?
I'm very suspicious that we are close to long-term lows. We are near our lowest cash prices in the 11 years. You have to go back to 2008, which was a different financial world at that time. World soybean demand is still doing quite well. Now, I understand there are doubts about China's level of demand, and that's part of the equation that I don't think anybody has a good grasp on yet. China typically buys our beans from October to February. Are they going to show up as usual this year, or are they going to try to hold back their consumption? We don't know the answer to that yet, but we have seen a lot of backdoor demand for soybeans coming from countries that we wouldn't normally expect. And
so demand is really the wild card here. We just can't predict that?
Yeah, and how do you make an ending stocks estimate without knowing demand? But that's the predicament we're in right now.
Todd, is it possible that some of the countries that are buying us now because we're at a cheap price and probably haven't bought from us for a while, is it possible they'll buy and sell to China?
I think we have to stay open on that. I think the jury's still out. One of the buyers that boosted their imports in July that we saw from the Census Bureau numbers was Indonesia, not a customer we would normally think of as being a big soybean buyer on a monthly basis. Another one was Egypt. Egypt actually bought more soybeans in July to make up for China's lack. That was a big surprise, and Egypt was the #1 U.S. buyer of soybeans in July.
So do you think it's possible that we have the low put in the soybean market, at least for the time being?
I think we're very close. The seasonal low typically is in early October in my mind. And because of all the bearishness of the trade war situation, I would not be surprised to see the seasonal low come later in the year, maybe around Thanksgiving time or something. But when we start to get our focus off of harvest and we get used to the crop size that we have and start looking at the demand ahead, we're going to be paying very close attention to China's import numbers and how that's getting there. So there's just a lot up in the air on the soybean table in my mind.
Talk about the wheat market and the wheat number in the report. Ending stocks were left unchanged for the U.S. basis, but the world was where we saw a little bit of maybe shock or what?
Well, it was a slight increase. It wasn't really a shock in the same sense.
A shock because everybody thought it was going to go down, though.
Yes, and myself included. And we did get some of the small reductions we expected, but Russia having 3 million metric tons more was a bit of a bearish surprise. But I'd say that's very small on the scale of wheat. We're still looking at a world crop that's going to be about 4% less this year than a year ago, according to USDA. If you look at the International Grains Council, they're looking for about a 5.5% drop. So I still think the truth is maybe somewhere in the middle of those two guesses. And the overall ending stocks wheat situation in the world is starting to show a little better balance this year, just not in the U.S. We are just finding a very difficult time to move wheat out of this country.
So do you think that wheat prices are fairly priced right now then?
According to my model, they are. They're basically in the middle of their expected range right now. So now I think they're going to play off factors, obviously, like today's report and whatever news or whatever surprises are ahead in the year. But I would not be surprised just to see kind of a choppy sideways range through winter of 2018 into early 2019.
So the global production issues that pushed us up during harvest, those are that's not the story anymore, that's over?
You know, the excitement of like hearing about dry wheat conditions in Europe, that excitement has ended. We're past that. I think we're more now just getting used to the idea of looking at a little less production this year, but the supplies are still ample enough to keep people comfortable and not too concerned about having to run out and buy wheat.
What about the livestock markets as we move into fourth quarter? How much uncertainty is there just because we still have so many unknowns with trade?
Actually, I feel pretty stable about cattle and hog prices as we move into the fourth quarter. Our demand actually has still been fairly active for both beef and pork. It's held up very well. Obviously, the pork situation has had its tariffs concerns this year. In the case of cattle, though, the demand has been pretty good this year, and we've seen good exports in the beef cattle demand. It's just that we continue to have a comfortable amount of supplies to fulfill that. So we've been kind of stuck in this sideways range in cattle, and I don't see anything really pushing us out of that sideways range at this point in time. In hogs, yes, we still have an abundance of hogs. It doesn't seem to be difficult for packers to find hogs for their needs, but we are at such a cheap price. I think close to 15-year lows on the hog price, so you would expect some kind of long-term support there.
Have hogs, especially in those deferred months, already priced in all of the African swine fever buzz or not?
You know, that is probably one of those things that maybe a year from now we'll forget about. Yes, it has potential. There may be reason to be concerned, but so far, the last numbers I heard, I think, were 40,000 hogs destroyed. China has 700 million hogs, so we're still talking 99% potential and 1% problem. If that changes, yeah, that'll be a serious concern. Right now, I think it's more of an emotional effect on the market.
So you think in those back months, especially in the 19 contracts, are those hedgeable levels right now?
Oh boy. Well, you know, I think you have to say yes, because as a hog producer, you got to know there's plenty of supply out there and plenty of risk extended out.
All right. Appreciate your time as always. Thanks for joining
you.
us. Todd Hultman with DTN, and that's this week's Ag Week Market Extra.